Hello, welcome to this episode of Acrinos Access. I'm your host, Eric Matei, joined today by Eric Levenhagen. Eric is the CPA, principal, and founder of Prowise Financial Consulting. And Eric's been joining us here. This is actually our third installment of a multi-part mini-series that we're doing, all focused around profit first and financial harmony for the modern eye care practice. In the first episode, Episode 1, Eric provided us just an overview of exactly what profit first methodology and the financial harmony framework look like in their application to the modern practice. In our last episode, we took a deep dive into applying these principles and concepts to the modern cold start, or those of you that are in your early years of practice ownership. And in this episode, Eric's going to provide us a look at profit first and financial harmony through those peak growth years of your practice. So, Eric, thank you so much for joining us here again on Acrinos Access.
Yeah, Eric, thanks for having me back. This is awesome.
Yeah, so look, I know we've got a lot to jump into in this episode. So why don't we start by maybe just briefly providing a brief recap of profit first in the financial harmony framework?
Yeah, sure thing. Profit first is the premier cash flow management tool that we use, actually a component of the overall financial harmony framework. So financial harmony covers three main pillars because it's all about improving the financial health of your practice so that you can achieve your personal goals faster than you could on your own, right? So we're talking about personal prosperity, making sure you're going where you want to go, not just with the business, but in life. Your work-life harmony. How are you going to coexist with this business? What does your life look like? How much time are you building? Is what you're building going to help you like spend your time the way you want it to? And then financial clarity, which is about the cash flow system, the business performance, all the things, financial accounting that go in with that. So that's really where in that cash flow system of profit first, that's really where that fits in. Profit first is a cash flow management system that we use by allocating, or that we works by allocating dollars to specific bank accounts that are earmarked for specific uses that you need to have to achieve a successful business, right? So.
And I think what's fascinating here, particularly as we're going to jump into this episode, we're talking about applying these principles and methodologies to the practice during the peak growth years, is that when practices hit these peak growth years, we typically align that with the time when they've paid off their startup or acquisition loan, which is usually 10 to 15 years. Well, conventionally, it's 10 years. I mean, recently, some banks, some lenders have gotten creative with different ways these last few years as we saw rates increase. But nonetheless, we're talking about entering those peak growth years of the practice. That is going to align with when the startup or acquisition loan is paid off. And now you're finding your practice is really spitting off some wild cash flow. So, Eric, kind of setting the stage for that. Let's jump into it and start talking about applying these principles and this framework to those practices that are in those peak earnings years.
Mm-hmm. Yeah, for sure. I mean, so when we get a new client that comes in that's in those peak growth years, right? A lot of times, like we're gonna start off every time with a performance assessment. Sometimes people are coming into us and things are going well, and they just want and need a better or expanded relationship, like with their accounting team, with their financial consultant. Others, they're kind of there's some problem had them come in to talk to us, and so right out of the profit first system is this instant cash assessment, and then when we get going and actually working with somebody, we're going to have them do a more detailed profit assessment to let us know and identify like any financial performance gaps, right? Even if things feel like they're going well, sometimes that assessment can we can get in there and figure out, things are going good, but they could be better without doing, much anything else except for focusing on these couple of key areas. Maybe it's cost of goods sold. Maybe it's, something that's related to staff efficiencies. Maybe it's just overspending in a certain area or misallocating some funds somewhere along the way. And I've seen there's a lot of different examples that we get into, but really it's just identifying like what's not working as good as it could be. Let's fix those. What is working really well? Let's keep doing that, right? So as we're going along here, and then a lot of times too, if practices and practice owners are not still have some financial stressors at this level, a lot of times it revolves around their financial clarity and the reporting systems that they have, like not knowing, like they see the cash flow, they see money in and out every day, but it's like, where's all that dust settle? And like, what is the business really doing? Like routinely, so we want to establish like, what types of things and reporting are we looking at daily, weekly, monthly, quarterly, and annually, right? So we kind of take a look at that whole process. And the simplest example of one of those would be like your financial statements monthly, right? So making sure that the foundations for that, which mean your bookkeeping, are good, because the bookkeeping is organizing your transactions that turn into financial statements through the accounting process, that turn into ultimately decisions you're going to make through the analysis process. So, but the foundational piece has to be there and good and timely as well, right? So all those things have to work together in concert in order to really feel really good about it, and then know really what the current practice performance is. Okay. So does that make sense? Or
It absolutely does. And I think, something you're hitting on there that is critically important is the quality of the information coming in, right? And I know we've talked about this before, Eric, right? Garbage in, garbage out. I mean,
sure.
Whether we're looking at finance, running and growing the business, or, also look, doctors out there, think of diagnostics. I mean, if your technician gets a poor photo of the retina, well, you got to go back. You need good data before you can start that process. So I know you've only just kind of started some of this application to the peak earnings years, but I think the first two call outs I'm hearing, Eric, number one is, where's your data coming from? Is it clean data? And if it ain't clean data, number one, we need to get our hands on clean data. Then that leads to number two, which is the performance assessment. And that's something I know that you guys find in Prowise Financial. We in Acrinos find that oftentimes as well. Got to start with just kind of understanding, how are things operating right now? Where are we exceeding expectations, and where is there opportunity in the business? So please continue.
Yeah. So once we're there, right, then something we talked about in the last episode that we're going to revisit here, which is that life goal map, right?
Sure.
It's either updating that, or if you've never done one, if you've never gone through that at some detail about what your personal goals are, because that's really, again, there's all types of goals. There's a reason why you started this practice to handle patient care in the way that you wanted to impact employees that are working for you in your community, and maybe something bigger. But we have to like define those. And a lot of times, even if you've started out with a goal and visions 5, 10, 15 years ago when he started the business, some of those things change or evolve over time, right? So we have to kind of revisit that to make sure, again, that we're aligning our growth plans with our long-term vision that we want for our life. Otherwise, we get into this mode of, coming to work and grinding it out and looking backwards 20 or 30 years in the future, and kind of, seeing all the missed opportunities we had, right? So we don't want people to be in that mode for sure. So we're checking in with that at this point. And then we're really taking a look at, okay, if your practice is here, and we've done the initial assessment, we've kind of got the core operations, I'm going to say cleaned up or humming along really well. We're big into, like if you're going to grow something and take the next stage that's aligned with your goals, right, that we've just figured out, let's make sure like the core operations are solid before we start building on more issues and stressors on top of that. Because if we're going to try and build something off of a weak foundation, then it's not going to get us where we want to go, right? It's going to crumble. So kind of analyzing, this is where things may come into play as far as like analyzing capacity, utilization, your infrastructure needs. Like we always talk, and this is probably where Acrinos helps out a ton as well with the operational side of all this. But we always talk about, conceptually, we talk about your overhead, and I keep referring to this thing as infrastructure. It's really just the overhead and your revenue production capacity, right? You're going to invest in a certain level of overhead, meaning space, staff, equipment, and all the things that go along with that, fixed expenses. And that combined with your time is going, at some level, is going to give you the capacity to produce a certain amount of revenue. That business is going to top out at some point, and you have to make more investments to increase your infrastructure. So a lot of times that kind of your foundational OpEx or your fixed expenses are going to like stair step over time. Maybe not exactly, there's a little bit of variance, but if you pan out and take a look at the big picture, this thing is stair stepped over time, because you get to a certain point and you have to add more lanes. You have to add another associate. They need, you need more support staff. You need a bigger space or your own building, right? So it's like these bigger investments that kind of pop you up. But once you get up there, you have to understand how that changes how you've been operating before, and kind of what the financial results have been until you get ramped up to using more of that and utilizing more of that capacity that you just invested in. So we want to like plan all of that out. When we talk about profit first specifically, that's where, since we've been talking about the profit account from day one, or hopefully you have anyways, if and you're capturing that free cash flow, right? That's one of the 4 core uses of that free cash flow that you're retaining, is to help self-fund your growth and expansion. And that could be something as simple as, you need a new associate. It's going to take them 1 to 3 months to get kind of acclimated into your practice, into your systems, and really get them humming along and moving really well. Let's, save up the first 3 months of their wages so that it's not like putting a huge stressor on the current operations. And it's those things like that. I mean, you can do the same thing for any of the other major growth initiatives that are coming along here, right? So it's really about optimizing and then growing based off of your goals, where you want to be and how you want to be spending your time. So all those are like huge components of it. And then I'd be remiss to kind of finish this section off, excuse me, without talking about what we actually file it under personal prosperity in the framework, financial harmony framework, but a comprehensive tax strategy. Like you're at the point now where you're spending off a lot, the business is spending off a lot of taxable income, right? In the profit first system, that's a combination of your owner's compensation, your profit that whether you're holding that in as business savings, as retained earnings, or if you distribute it out to yourself, or even if you paid off debt, right? It's like we can get into that maybe later, but that's like the huge surprise when with some people is like, oh, it's used all this money to pay down my debt. Well, that's great, but that doesn't help out your like tax situation, right? Because that loan principal is not deductible. It wasn't taxable when you got the money. It's not deductible when you pay it down, right? So you need profit and after-tax dollars to be able to not after-tax dollars, sorry, but you need profit to be able to pay that down. So, but it's those 3 areas, right? Owner comp, tax, and profit that are going to make up essentially your taxable income, unless you redeploy some of those profit dollars into equipment or other deductible items. But there's other things at this stage then that we really want to make sure you're looking at in terms of core tax strategies that every business owner needs to consider. We've got, there's 10 specific areas that we look at there, from entity optimization all the way down to your cell phone and everything in between, right? And not all 10 are going to apply to everybody, but the ones that do, you want to make sure you're using, because you're only just talking about leveraging the tax law that's already there without necessarily spending any more dollars. And then we can get into more intermediate and advanced things at this stage too, about, are you funding? What type of retirement plan are you funding? And does that align with your personal investment plan? Because we're not just going to throw money into like a 401k or anything unless you actually want the money there personally as well, right? So that's very careful not to, what's the old saying, not to let the tax tail wave the financial dog, so to speak. But with every decision in the intermediate and intermediate and advanced tax planning, those are the types of considerations you got to make. There's a lot of things out there. You just got to know what aligns with your goals and what's going to be the most beneficial. So,
yeah, Eric, man, really, really great insights there regarding, applying profit first and financial harmony during these peak earnings, peak growth years of the practice. And to call out some of those key points that you mentioned, I think first and foremost is, what is the vision, right? And I know you and I were talking before hitting record here, in the work that you all do at Prowise Financial Consulting, the work that we do here at Acrinos, a lot of it is we're helping people make decisions, right? We've created the tools and the advisory to help people make these decisions. And oftentimes for practices, once they are in these peak earnings years, it's kind of like, oh my goodness, we worked so hard for so many years to get this thing up and running. And now this thing is running. And now it's kind of this overwhelmed with what's in my best interest for what's next, because as we know from anything, whether we're talking finance and growing a business or whether we're talking, sport and training for the Tour de France, it all comes back to what is the goal, and let's assess what's currently being done, how that's going to either deliver us to the goal or where will it deliver us, perhaps. I don't want to say falling short of the goal, but hey, where's our current trajectory going to deliver us? And if we want to get here, what do we need to do now to get that trajectory to shift? Some other really fascinating things you touched on there has to do with the infrastructure of the business. And I like how you referred to the overhead production capacity, right? So this is something that is oftentimes overlooked, right? And to our audience out there, what are, to think back to, and you can record back in the episode when Eric was commenting on that, but think of that overhead production capacity of being, you can only do so much in that practice as one doctor, as one provider, right? If you only got 2 opticians in the optical, there's only so much productive capacity that 2 opticians can deliver. And the list goes on, right? I mean, we start looking down the practice, not only as it pertains to the human capital, but also the equipment and resources, right? I mean, if we only have one visual field, and we know that 80% of our patients we're going to want to sit in front of that visual field, well, there's only so many patients we'll be able to see, given that capacity limit there. So a lot of really fascinating things that you've touched on, Eric. And I think, to pull it all together, also, you mentioned it all ties back to that life goal map, right? Like, truly, what is that end game? And what are we wanting to do from a standpoint of, personal prosperity, finding that financial clarity in the business and how that's going to support our personal goals, and then ultimately the work-life balance piece.
Yeah, absolutely. I mean, you're touching on it too, just real quick, in terms of like when business owners in a lot of industries, right? Like, we've worked and I've seen a lot of professional services practices over the years. That's really like where a lot of this whole framework stems from that, and applies directly to, can apply directly to anybody in professional services. And,
sure,
it's that type of business owner, just like an independent optometrist, who starts the business not necessarily because it's a great business model, but it's because you're the operator and you can actually do the thing, right? It'd be something different if I went out and started an optical shop. Like, I don't know the first thing about eyewear, and I know what I know for wearing them, but that's about as far as that's going to go. If I'm like going to pluck in and actually run the thing, or if I'm going to start any other kind of business, right? So it's like, okay, you get into it because you're running the thing. And, I've seen like a lot of examples. I've seen examples in my hometown. I've seen other CPA examples from colleagues who, same type of process, right? They didn't figure out the trajectory of where they could go. They got into just this, really great business, but yeah, I'm working 60 hours a week. In tax season, they're working 80, 100 hours a week. I've had over just in, a handful of years, I've had 2 colleagues who died at their desk in the CPA world because they were not focused on, I mean, there's probably other reasons too, but like one really big one is they weren't building a practice that suited them. And they were just heads down going, and they just never got out of that kind of initial growth phase, right? And started thinking for the longer term. So
yeah, lot of really, really great insights here in this episode, Eric. And for those of you just tuning in, we've been sitting down here in this episode of Acrinos Access with Eric Levenhagen of Prowise Financial Consulting. And we've been exploring this world of profit first and financial harmony through the peak growth years of your practice. Eric, I know we've only just scratched the surface, but as it were, we try to keep our Acrinos Access, to a reasonable length. So for those viewers out there that would like to explore this more, how can they connect with you?
Yeah, for sure. I'm always happy when people reach out if they just want to have a conversation. My email's up there, eric@prowisefinancial.com. Otherwise, if you want to take a look and kind of see what a little bit more in depth about what the financial harmony framework is going to be about, you can go to our website where there's a free assessment. Just go to prowisefinancial.com, click the Get Started Here button, and take the free assessment and start getting some insights into where your practice is at.
Yeah. Well, Eric, thank you so much for joining us here on Acrinos Access and collaborating with us and putting together this mini video series. So, in the context of all this also, you come to look at applying this stuff in the real world. And as we've discussed, in our world in Acrinos, we're looking at a lot of the same things, y'all, from an operational standpoint, right? And making it happen for folks like Dr. Tyson Allard of True Vision Optometric Group. As a matter of fact, just this week, Review of Optometric Business did a profile feature on Dr. Allard and how he's utilizing some of Acrinos' resources to really make it happen through these peak earnings years. So be sure to check it out at reviewob.com. And if you want to expand on this conversation around profit first and financial harmony through your peak earnings years, definitely Eric Levenhagen at Prowise Financial is the authority on this front. So Eric, I'll look forward to connecting with you in the next episode, where we're going to apply these concepts to the twilight years, right? So for all of you viewers out there, all you doctors out there that are eyeing retirement, tune into the next episode. We're going to talk about applying profit first and financial harmony as you're looking to transition your practice. Eric, thank you again so much for joining us this episode of Access.
Always great to be here, Eric. Thanks so much.
See you next time.